The clock is running out as the United States of America inches towards June 1st, the deadline for raising its debt ceiling. America now faces the risk of running out of cash. The US government principally runs on debt based on bond issue. The government continues to increase its spending on various programs, resulting in a growing national debt. It has hit the ceiling of a debt of $31.4 trillion. Will the American Congress raise the debt ceiling, or will the US economy crumble like a house of cards? What are the first things to get affected with the debt crisis? The government will not be able to pay for its standing expenses such as salaries, pensions, institutions, and also interests on its existing bonds or previous debts. As the USA turns into risky financial ground, lenders too are likely to increase interest rates. This could further devalue the dollar. While the Congress is deadlocked over resolving the issue just yet, Moody's economists have predicted that the crisis could lead to a recession in 2024 if not handled with correct measures. It could cost the American economy 2.6 million jobs and push unemployment to a peak of nearly 6%. America's debt ceiling has been raised 78 times since 1960. In December 2021, when it was raised to $31 trillion. Now, how will all this impact India? Three things can happen immediately. First, it can lead to financial market volatility. If the US faces a debt ceiling crisis, it could lead to increased uncertainty and volatility in global financial markets, including those in India. Investors may become more risk-averse and reduce their exposure to emerging markets like India, leading to capital outflows and downward pressure on Indian stock markets and currency values. Next, reduced foreign direct investments. A US debt ceiling crisis could also impact foreign direct investment flows into India. Investors may be hesitant to invest in emerging markets due to heightened uncertainty. This could slow down investment in Indian industries and infrastructure projects, affecting economic growth prospects. Third, trade and export implications. The US is one of India's major trading partners. Any disruption in the US economy due to a debt ceiling crisis would have adverse effects on bilateral trade. Reduced US consumer spending and weaker demand for Indian exports could hurt Indian industries reliant on the US market. What will the US do now? Well, the Congress can take a last-minute decision to raise the debt ceiling. But this is only going to be a short-term measure unless the entire underlying issue of accumulated debts is addressed.